Today we're going to talk about PMI. What is it? Welcome to Home in Riverside. I'm your host, Ann Downing. Today I'm going to talk about PMI. What is it? A lot of first-time home buyers especially ask me this question. PMI stands for Private Mortgage Insurance. This is an insurance that a lender will get against your property if you do not put 20% down payment when you're buying the property. Why do they do this? Well, they're a little worried that since you didn't put a lot of money down, that you may foreclose on the house in a year or 5 years. So let's say you want to buy a $300,000 home, but you don't have enough money to put down payment for 20% down. So you're probably going to get PMI tacked on to your monthly payments with your mortgage. And that's going to be about 0.5 to 1.0% of the value of your house when you purchased it. So for a $300,000 house, it's going to be $1,500 to $3,000 per year that you're going to have to pay towards PMI. And so what do? Do you always pay this? No. Actually, they only care about the 20% down. So once your house mortgage is paid down to $240,000, then you should be able to request from your mortgage company that they get rid of PMI. I actually had a situation like this myself where I couldn't afford 20% down on a house. And I knew that my equity in my house had made my house worth a lot more than what I purchased it for. And so I took the current value of the house minus my loan amount and realized I had that 20% equity that the bank would look for. So I gave them a call and they said, you really want to get rid of PMI? I'm not sure we know how to do that. And I kept being persistent. I knew that I had a right to ask for them to cancel PMI, and you have a right too. Don't let the mortgage company tell you that you can't ask to cancel the PMI. Actually, when you have 22% equity in your house, they're required to cancel your PMI insurance. I had found out that my mortgage company had not done this, so I called them and told them I wanted it canceled. Now they told me I needed to have an appraisal done on the house and I would have to pay for it. Well, the appraisal was $450, but that sure beats a $3,000 a year PMI payment. And it's worth it if you're going to stay in the house long term. So I paid the appraisal and I found out that it was having the 20% equity, and over time, it took me about 3 months, I think, to get the mortgage company to drop the PMI. But you can do it, and it is possible. You may ask, do I always have to have PMI if I don't have enough money to put down? The answer is no. Talk to your lender and see if they can get you a piggyback loan. Let's say you only have 5% to put down on the house. You can get a piggyback loan or a second mortgage for 15%. And that way you've got the total 20% down payment covered. That's all for now. See you next time. Please like my page and subscribe. Thank you.